Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Consun Pharmaceutical Group Limited annual report. Consun Pharmaceutical Group Limited offers a diverse range of businesses and services in the pharmaceutical industry. At its core, the company specializes in researching, developing, manufacturing, and selling Chinese medicines and medical contrast medium products. The company operates in two main segments, Consun Pharmaceutical and Yulin Pharmaceutical. Within these segments, Consun Pharmaceutical Group Limited provides various types of medications for different health conditions. These include treatments for chronic kidney diseases, diabetic kidney disease, nervous system disorders, and skin diseases. Some of the specific products offered by the company include uremic clearance granule to treat chronic kidney diseases, gadopentate dimeglumine injections for nervus centralis, stomach, chest, pelvic cavity, and extremities iopamidol injections for neuroradiology, angiography, and urography ultrasonic microbubble contrast agent products, in addition to these medical contrast medium products. Consun Pharmaceutical Group Limited also offers a range of traditional Chinese medicines, TCMs, for various health conditions. These include TCMs to treat diabetic kidney disease Yuanli Kang, an iron dextrin oral solution Yibao Yuan, an erythromycin estolate suspension Yuantong Ning, a cetirizine hydrochloride oral solution. The company also provides products for women's health, including Gin antidysmenorrheic tablets for irregular menstruation and abdominal pain during menstruation, antibacterial Fuji lotion to treat Staphylococcus aureus, Candida albicans, and Escherichia coli in the feminine vaginal. Furthermore, Consun Pharmaceutical Group Limited offers a range of other products, including bone-setting liquid Yunxiang analgesic tincture for treating rheumatism, common cold, headache, stomachache, cardiodynia, and pain in the gastral cavity, and Chilblain Sankey Chuangchun capsules for activating blood circulation and dispersing blood stasis, Shijuking capsules and tablets, and Pianol ointment for skin disease overall. Consun Pharmaceutical Group Limited provides a comprehensive range of businesses and services in the pharmaceutical industry, catering to various health conditions and needs. Consun Pharmaceutical Group Limited market capitalization of $14 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Consun Pharmaceutical Group Limited holds a significant advantage in their industry. Consun Pharmaceutical Group Limited trades at a higher price-to-earnings ratio of 11 times and a higher price-to-book ratio of 2.6 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 25% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 4.97%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline in the company's business can be identified through an analysis of various product categories and external factors. Revenue growth is primarily driven by kidney medicines, which experienced a significant increase of plus 20.3% in 2025, solidifying its leading position in the market. Other notable contributors to revenue growth include medical contrast medium, plus 10.9%, uremic clearance granules, UCG, and certain segments within gynecology and pediatrics medicines, dermatologic medicines, and hepatobiliary medicines. On the other hand, revenue decline is primarily attributed to orthopedics medicines, which experienced a significant decrease of -6.2% in 2025. Additionally, contract liabilities decreased by 30.6%, and project development deposits dropped from RMB 31,674 in 2024 to 0 in 2025. Other factors that have an impact on the company's revenue include sales to its 5 largest customers, which accounted for 59.7% of total revenue, as well as donations and rental income from operating leases. However, interest income decreased by RMB 12,000 and 19,000. The net income of the company experienced a significant increase, rising by approximately 18.4%. This growth is further supported by another figure, which shows an even higher increase of 19% to RMB 667,120,000. The improvement in profitability and market share has led to an increase in profit margins. The gross profit margin specifically saw a notable rise from 75.6% to 78%, representing a growth of 2.4 percentage points. This upward trend indicates that the company's ability to maintain its prices while controlling costs is improving, contributing to higher profits and net income. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. The net cash generated from operating activities has increased by 11.5% to RMB 211,796,000 in 2025 compared to the previous year. This increase is evident across multiple pages of the summary, with consistent figures and confirmations that the company is generating positive operating cash flow. The data suggests a substantial growth in cash generated from operations, rising to 1,306,099 RMB 0 in 2025 from 1,184,167 RMB 0 in 2024. Furthermore, the net change in operating cash flow is a positive plus 448,540, indicating that the company's core activities are producing more cash than before. These multiple confirmations across different pages of the summary provide strong evidence that the company is indeed generating positive operating cash flow. This trend suggests a healthy financial position for the company and indicates its ability to sustain its operations without relying on external funding sources. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, a notable decrease was observed, with total debt decreasing by 20.3% from RMB 267,169 in 2024 to RMB 212,920 in 2025. This reduction is attributed to a decrease in utilized bank loans, which dropped from RMB 253,340,000 to RMB 200 million. On the other hand, interest expenses have also seen a substantial decline. According to financial reports, interest expenses decreased by RMB 20,396 from RMB 24,475 in 2024 to RMB 4079 in 2025. Additionally, finance costs, interest expenses, dropped by RMB 20,528 from RMB 24,888 in 2024 to RMB 4360 in 2025. These reductions indicate a significant decrease in the company's interest expenses over the past year. The performance of various segments within a company has been analyzed based on revenue and profit increases. In terms of segments that performed well, Consun Pharmaceutical stood out with significant growth. Its revenue increased by RMB 450,120 from 2024 to 2025, while its profit rose by RMB 426,758 during the same period. On the other hand, Yulin Pharmaceutical experienced relatively stagnant growth. The segment's revenue and profit only slightly increased by RMB 30,270 and RMB 12,613 respectively from 2024 to 2025. These results indicate that Consun Pharmaceutical was the clear winner in terms of performance, while Yulin Pharmaceutical struggled to achieve substantial growth. Management is optimistic about the company's growth prospects, particularly in gynecology and pediatrics medicines, which are expected to see a 4% increase in sales revenue by 2025. The group aims to sustain this momentum through sound business operations and value creation strategies. To achieve this goal, management plans to implement several initiatives, including the rollout of a diversified payment system, accelerated development of innovative drugs, and digital intelligent transformation. These efforts are expected to drive growth and improve financial performance, as evidenced by the 6.7% increase in revenue and 59.5% rise in comprehensive income year-over-year. The company has a history of rewarding its equity shareholders through dividend payments and share buybacks. As per the financial reports, the company approved and paid dividends to its shareholders in 2024, page 115. Furthermore, it is evident that the company has also been actively involved in buying back its own shares during the year, page 116. The company's share buyback program was successful, with a total of RMB 168,020 being spent on purchasing its own shares, page 214. Interestingly, the dividends for these buyback shares were deducted from the total dividends payable to shareholders, page 215. This indicates that the company has been using a portion of its dividend payments to repurchase its own shares. Overall, this demonstrates the company's commitment to returning value to its shareholders through both dividend payments and share buybacks. There are concerns about the potential impact of inventory buildup and supply chain disruptions on a company's operations. One area of concern is distribution costs, which have increased by 9.3% to RMB 72,775,000. This increase may be due to various factors, such as higher transportation costs or inefficiencies in the logistics process. However, despite these concerns, there is no clear evidence of inventory buildup. In fact, a reversal of write-downs on inventories suggests that consumer preferences have shifted, potentially reducing the need for certain products and mitigating the risk of inventory buildup. Additionally, an increase in prepayments for raw materials may indicate a proactive approach to managing supply chain risks. That concludes the financial summary for Consun Pharmaceutical Group Limited. Feel free to comment below, and I will be happy to answer them when possible.